Learn. BQ Learning. Only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah. You're watching Indian Open. Let's go straight to the headlines. Donald Trump says the US will leave the Iran nuclear deal, calls it defective at core. Brent crude prices crossed $76 a barrel to hit a 3-year high as supply concerns gripped the market following the US withdrawal. Essar Steel's lenders give Numetal and ArcelorMittal an opportunity to clear all outstanding debt to become eligible bidders. That is a Bloomberg Quint exclusive. And higher volumes are expected to aid Eicher Motors in the fourth quarter. The numbers come out today. All right, let's take a look at the trade setup for the day. Remember, the US markets didn't react too adversely to this announcement, and Asia too is taking it on the chin reasonably well. Not that it's meant to have a deep impact on equity markets immediately. Maybe it will be a prolonged impact on select commodity markets, select geopolitical relationships, and that may impact the market. So anyways, this was not anticipated to have a big gash immediately on open, but the markets are doing okay. Just slight nervousness, about 0.25% of 1/3% for most of the Asian markets. And maybe this was coming because minus this deal scrappage as well, you would probably have seen this because at least the Indian markets were finding it very, very tough to scale newer highs with conviction. The last few days, the trade has shown that we've not been able to have some major volumes or major price action on the index at these higher levels. To the bank nifty, of course, has been something of a refreshing change because the last few days it's the Nifty Bank which has done extremely well. Look at the build up as well on the Nifty. Hardly any build up. The Nifty Bank OI is up about 14%, so fair bit of long pile up happening in the Nifty Bank. But you would want to believe that if not for this nuclear deal, but the Karnataka election verdict that comes out on Tuesday, maybe some nervousness ahead of the Karnataka verdict might be warranted as well. Fair bit of flip-flop as well. The reason I bring up these stock futures OI changes is that you've seen the same set of stocks on which you're seeing a long build-up have fair bit of short build-up a couple of days ago. Deven, for example, massive short build-up a couple of days ago. A dramatic change, a U-turn, the price change as well, but more importantly, a fresh long formation seen out there. Some fairly strong pieces in the PSU banks or banks at large, ICICI Bank, Indian Bank, etc., carrying on the baton. And look at PC Jewellers on anticipated line, some short build-up, but yesterday post 3 o'clock or post 2:30, Jubilant Foodworks piled on some short positions as well. Ambuja Cement had some short positions too. Some fairly interesting action on the stock futures and will be watched out for. Hardly any participation from FIIs. DIs pumped in about 923 odd crores, but that's par for the course, isn't it? Equity funds are sloshing in cash, highest ever AUM to manage. You would expect that the inflows are strong and they would be deploying this bit of cash. So stocks to watch out for. There are 2 or 3 result reactions that I presume we will see. A set of companies which have come out with strong numbers, a set of companies that have come out with weak numbers. Some of these may react, some of these may not. Watch out for Automotive Axle. Interesting set of numbers to Syntex, SKF India, amongst the companies that came out with a strong set of quarter numbers. The weaker hands, a couple of names out there which came out with a slightly weaker set of numbers. Sun Pharma Advanced Research, you never know what could happen. ABB might react a bit adversely to these numbers as well, so let's wait and watch. And lastly, Everready Industries, I thought, in addition to Hindalco, of course, remember Novelis came out with numbers which were good numbers, in line, but good numbers. Maybe Hindalco could react as well, but watch out for Everready Industries. That would be interesting. Amansa has sold about 1.3% stake at 290 per share. They bought it at about 265. We dug up that information last time, but when Amansa Holdings and Akash Prakash gets out of business, they're probably getting out because they don't envisage too much of growth prospects going ahead. This may just cap Everready, if not lead to some selling in the near term. Hardly any movement. The stock is trading around the 52-week lows as well. However, let's jump straight to the bigger news at hand. In fact, before we do that, first word, and we'll start off first word with the biggest news of the day. Mr. Fereidun Fesharaki and Mark Toe will find out how Trump's decision will impact global trade and maybe some Indian companies that trade with Iran. Then Vishwanath Nair joins in to take us through his exclusive story on Essar Steel's lenders giving Numetal and ArcelorMittal the option to become eligible bidders. Agam's also put together a comparison of how some of the listed consumer players have performed in the fourth quarter. And on the end, Yatin will take us through what's to be expected from Eicher Motors numbers. But to the big story of the day, Donald Trump has kept his word. He announced that the US will withdraw from the landmark 2015 deal to curb Iran's nuclear program. Trump said he intends to reinstate financial sanctions on the country, a move that takes West Asia into a fresh chapter of uncertainty. Listen in.
It is clear to me that we cannot prevent an Iranian nuclear bomb under the decaying and rotten structure of the current agreement. The Iran deal is defective at its core. If we do nothing, we know exactly what will happen. In just a short period of time, the world's leading state sponsor of terror will be on the cusp of acquiring the world's most dangerous weapons. Therefore, I am announcing today that the United States will withdraw from the Iran nuclear deal. In a few moments, I will sign a presidential memorandum to begin reinstating U.S. nuclear sanctions on the Iranian regime. We will be instituting the highest level of economic sanction. Any nation that helps Iran in its quest for nuclear weapons could also be strongly sanctioned by the United States. America will not be held hostage to nuclear blackmail.
Strong words, and to discuss the implications of these and of Iran sanctions on crude oil markets and trade in general, we are joined by Mr. Fereidun Fesharaki. He's chairman at Facts Global Energy. In a bit, Mark Toe, managing director of asset management and head of research at Fung Financial Group, will also join us. But let me start it with Mr. Fesharaki. Mr. Fesharaki, good morning, and thank you so much for taking the time out and joining us from Singapore. Your initial reactions to this on trade, on crude, a lot of talk about how while Iran will lobby with some of the other European and other nations to stay a part of this nuclear program, I think Donald Trump made it amply clear that any nation that supports Iran would also face the wave of sanctions from the US. How difficult would it be for Iran to manage the other nations who are a part of this deal?
It will be impossible. The U.S. sanctions are very clear. They are the laws of the U.S. Congress. They would come into effect for within 180 days. So we have a period from today until November 5, 2018, where every country which is importing oil from Iran will be monitored by the U.S. government. And then the 180 days after that, they would have to cut between 20 to 30% of their imports. We don't know what the final number for the U.S. for Iran exports will be. Last time around it was 1 million barrels per day. I suspect they would like to reduce the current exports, which are about 2.7 million barrels per day of crude and condensates, to 1 million. So this would be more severe than the last time. And that would be effective only after November 5. So in the next 6 months, business as usual, but 6 months after, will be very dramatic fall in the Iranian oil exports and the dramatic impact on the oil markets.
By dramatic, would you be able to, I know nobody can quantify it, but what's your best guess of how dramatic could this dramatic be?
No, it's not difficult to quantify because we know what the Iranian oil exports are. We know what the U.S. last time imposed on the total exports from Iran. It used to be 1 million barrels per day maximum exports. This time it will be either that or even less. So we would be going from 2.6, 2.7 million barrels per day of crude and condensate to 1 million barrels per day. So it would be removing from the oil market somewhere between 1.5 to 1.6 million barrels per day of supplies. That is very dramatic. Even the Saudis, if they want to increase production to their maximum capability in the short term, they will not have enough oil on their own to replace this. So it must be a combination of them, Kuwaitis, UAE, Russia. Everybody has to sign in to be able to balance that. So that would push the prices up significantly.
That's interesting. Let's get in Mark Toe in on this as well. Mark, since we are on the topic of crude already, let's talk about that first, and then we'll talk about some of the other trade impact as well. What's your sense? The first thought that will come to mind naturally is that this will have an impact on the crude markets. Are you in a position to be able to say how much would the crude markets react near term, medium term?
Okay, thanks for having me. I tend to think that what Donald Trump said is no surprise to me at all, because you can see that he has been a source of uncertainty since his administration is in place. And actually, I think the geopolitical tensions will not be easing anytime soon. You can see that different kinds of things are happening all because of Donald Trump. And right now, for oil prices, I have been bullish for the past few quarters, and I think the worst time has been over, because you can see that while there has been some kind of a correction of the supply-demand imbalance, for traders, for investors, for the market participants, we all tend to think that the long-term structural problems cannot be solved anytime soon. So at this very moment, we can see that for the past few days, past few sessions, oil price has been moving up, and we can see that it has been testing the resistance at 70 for NYMEX. I think the overall implication is that we all can count on the market to price in something because of their expectations, and everybody is expecting that Donald Trump is going to say something like that. So we can see that some kind of profit taking has been in place immediately after the announcement. But of course, for the medium term, as you said, we can see that the impact will still be felt. So I'm going to be even more bullish, because you can see that while we can calculate the output, as said, we are also counting on the expectations of the other people, other participants. So at this moment, I'm going to be even more bullish. I think for crude oil prices, I think well over 70, maybe 75 for the coming end of month is really possible and feasible.
Okay. 75 for the coming end of month is certainly possible. So certainly upsides for crude, we don't know how much. Mr. Fesharaki, just one quick thought here. I mean, Iran economy was reeling under pressure 2 years into this deal as well. For them to be able to salvage their economy, the one thing that they don't need, and no-brainer of course, are these sanctions. So will they do all they can in order to convince the world that they are not out on a path to enrich their uranium reserves or the uranium program, and then try and hope for some better trade terms with all the countries? Or do you think that path is a no-go now?
Well, we need to understand that it is not possible for the Europeans or the Russians or the Chinese to go against the U.S. sanctions. It's not possible. So it's not possible that Iran carve a separate deal. Everybody would be subject to the same deal. The Iranian economy has suffered very much. So although the sanctions have been lifted, still transfer of money to Iran is a problem. Nobody's investing in the country. So for the Iranians, the benefit of these sanctions has been higher oil prices, higher oil exports, higher oil revenues, which unfortunately have not always been channeled into the Iranian economy. They've been channeled to a lot of international ventures, military ventures. So, but the economy is in a free fall. The Iranian currency has fallen 50% in the past 2-3 weeks. And before that, another 30%. So this kind of event means that the Iranian economy would be in a much worse shape. And people in Iran, many of them would blame the government, not the Americans, on this. So the issue of what happens to the Iranian political system is what the Trump administration is after. They're after a regime change. They're not after a new deal. So this kind of economic pressure is exactly what they're looking for to create discontent and change of the government in Iran.
just show that function on the Bloomberg terminal, which shows the kind of trade relations that, for example, India has with some of the other trade partners, and it shows that some minor impact, if at all, on trade between India and Iran. I think China probably has a larger trade term with Iran. But that would be my last question on this, Mr. Fesharaki. Crude is one thing. Aside of crude, do you expect any major ramifications for trade? Because, I mean, at least from an Indian perspective, aside of crude oil, we don't see too much of a trade import from Iran coming in terms of export. Maybe there are rice exports and a couple of other commodities, but nothing too dramatic that will disrupt economies per se.
I think implications for India are quite serious because some of the companies in India, such as Essar, are heavily dependent on the Iranian crude. And for them to reorganize their system with a lower volume of imports would be a big challenge. The US government will impose a quota on India, and it is up to the minister to divide who gets how much. And so if it is divided across the board, then you would have some companies suffer in India. The ONGC Farzad B field investment in Iran, which is now back again on track, it's a very big deal for India. It's a huge discovery for India, which to develop it now would be a violation of the US sanctions. In terms of export of Indian goods to Iran, which previously replaced some of the Iranian the dollar currency that India owed Iran, that also will become a problem. So it is going to be quite significant for India as much as it is for other countries, but specifically for ONGC and Essar, it would have big significance.
Okay. We'll leave it at that, gentlemen. Mr. Fesharaki, Mark Todd, thank you so much for joining in and giving us this very quick perspective early on in the morning. Much appreciate your time. Well, experts out there saying crude will have an impact. Both of them, I mean, if I can use that term, bullish on crude oil prices. They believe there'll be upticks towards the month end. And Mr. Fesharaki also said that over the course of the next 6 months or you will see some further upticks that could come in because of the gradual withdrawal of Iran crude from the world markets as well. From an Indian perspective, I think OMCs import crude from Iran, so that could have a bit of a dent. Rice companies, KRBL in particular, but I think LT Foods or a couple of others too, do have exports, and therefore that could come into a bit of a question mark. KRBL, Kohinoor Foods, LT Foods, so very interesting to see. I distinctly remember KRBL having some share of that export market, and maybe those companies could react. Watch out for companies like Aban Offshore. The sentimental reaction could well come in today's session as well. Okay, more on this when markets open. Some other stories on First Word. A Bloomberg Quint exclusive. Lenders of Essar Steel have issued directives to Numetal and ArcelorMittal, giving them a week's time to clear all outstanding dues to be eligible to bid for the debt-laden company. Vishwanath Nair Johnson's on the phone line with more. We were talking about this yesterday or day before, Vishy. It's now apparently turning out to be true.
That's right, Neeraj. So this voting lasted for about 24 hours starting Monday. So by Tuesday afternoon or evening, the lenders were sure exactly what they wanted to do. A majority of the lenders have approved this proposal to allow both these bidders, that is Numetal as well as ArcelorMittal, to participate in the Essar Steel bidding process, only and only if they clear all of their overdues. Now, remember in the ArcelorMittal case, there's KSS Petron and Uttam Galva, where ArcelorMittal was the promoter in both companies. And therefore, whatever dues are owed to the lenders of these two companies, that have to be cleared by ArcelorMittal so that they can become eligible for Essar Steel. In Numetal's case, it's slightly more interesting because if you remember, Revant Ruya is a minority shareholder through a trust in Numetal. And Revant Ruya's father, Ravi Ruya, is one of the co-founders of the Essar group of companies. So essentially, they've said that whatever personal guarantees that Ravi Ruya would have issued for these Essar group companies to receive loans from their banks, those would have to be cleared. And that we're not entirely sure what the amount there is, but neither are the lenders. But for sure, that is going to be a big hit if Numetal chooses to clear those dues. I say chooses to clear those dues because Numetal and ArcelorMittal have that option of actually going to court and challenging the lender's decision. So that is available with them. Whether they're going to use that or whether they're going to repay, all of those will emerge in the next day or two. But in any case, both these bidders have gone to the National Company Law Appellate Tribunal, where they're questioning each other's eligibility. So whatever gets decided, 17th of May is the first hearing, but whatever gets decided in those pleas, that will have a direct impact on the way the lenders are continuing with this process, with the Essar Steel insolvency process, Neeraj.
Okay, Vishy, thanks for putting that into perspective. That's a Bloomberg Queen exclusive, Vishwanath Nair, with that piece of news. Okay, now to earnings. First, consumer companies, they've seen healthy volumes in the fourth quarter, partly aided by a low base of last year. And while most of them also managed to hike prices, rising raw material prices ensured that margins remain under pressure. Agam Vakil has put together a comparison of how 4 listed Indian manufacturers performed in the quarter gone by. Morning, Agam.
Well, good morning, Neeraj. I want to talk about 2 aspects today. When it comes to staples, first is the function of the revenues growth. To what extent is it because of volumes, and what do price hikes play when it comes to the growth that we've seen for this quarter? And secondly, how are raw material and input costs impacting overall margins, and how are operational efficiencies coming into play for some of these FMCG players which have announced their earnings? So let me start with the top line. When it comes to growth, as far as all these companies go, we've seen steady growth largely in single digit, but all inching towards the double digit mark for Dabur, Godrej Consumers, Emami, and of course with the exception of Marico. But if you notice, Marico is the only company which has had single digit, that is 1% volumes growth, and despite that they've seen about a 12% growth in their top line. This is essentially on the back of price hikes. That is not the case for the other 3 companies, as you can see here. We're looking at well, good volumes growth coming in for something like a Dabur, Godrej Consumers, as well as Emami. So, well, Marico, of course, in this case bucks the trend when it comes to volumes. Coming down to margins, let's take a look at how your input costs have increased, and this is where we're seeing some consistency in all the 4 companies so far. We have seen a substantial uptick of raw materials when you take that in comparison to the revenues. So for all the 4 companies, we have seen an increase on a year-on-year basis for this particular ratio. What does it mean for gross margins? Well, mixed views coming in here, because of the fact that Dabur and Godrej Consumers have been more efficient in maintaining their inventory and purchases, and because of that, despite the fact that raw material prices have moved up, they have seen an expansion in gross margins. But on the other hand, Emami, of course, has seen a 40 basis point decline. Marico, of course, is well, still really under pressure because of high copra prices, and the extent is so great that even that inventory management cannot come to its aid, at least as far as this quarter is concerned. Coming down to margins and overall operational efficiencies, then well, Dabur is the only one which has actually seen an expansion in your operational margins. So Dabur stands out in terms of cost optimization. That is not the case for Godrej Consumer or Emami. And again, Marico, well, really under pressure because of copra prices. So that gross margins, decline is showing up in its operational efficiencies as well. So on the whole, we've seen well, good volumes growth coming in, with the exception of Marico. When it comes to margins, again, Marico, is really under pressure, but all the other 3 have started seeing uptick, and well, the next few quarters will actually determine whether or not we do start seeing the strengthening trend when it comes to margins going forward.
Very interesting. Agam, have we been, or have brokerages been able to say with conviction which out of these have had either the best year or the best quarter and are likely to have the best year going ahead? Okay, so as far as brokerages go, there are mixed views coming in for all the companies. Okay, what do you think? Well, Dabur still stands out, and Godrej Consumer still has the very good analyst ratings. But all the analysts are unanimous in the fact that valuation, these levels are just a tad bit rich, but no one wants to really put their target prices down because they're still waiting for the next couple of quarters, and that will determine whether or not they do see a de-rating of sorts, or for that matter re-rating if we do start seeing some, because the monsoons are up, we're expecting good monsoons, and that could actually determine whether or not there could be a change in price targets for now. Okay. Great. Thanks, Agam, for putting that into perspective. Well, from earnings that have come by to earnings that are going to come by, Royal Enfield maker Eicher Motors will come out with its fourth quarter numbers today. And while sustained double-digit demand for the two-wheeler is expected to aid the numbers, the commercial vehicle division is also expected to pick up pace. Yatin Mota is here with the key numbers and factors to watch out for from Eicher Motors. Morning, Yatin.
Morning, Neeraj. And Eicher Motors, if you look at the consolidated performance, should be solid. In fact, we are expecting a 33% rise in their overall revenues, which are seen at little over 2,500 crores. And if you look at the absolute EBITDA and the profit growth, that is also seen in excess of 36-37%. So good growth on all counts as far as the consolidated performance is concerned. If you look at the margins, we are also expecting some bit of higher margins. Margins seen at 31.8% versus 31%. And this will be largely to do with the fact that we have seen higher volumes both in the commercial vehicle segment as well as in the two-wheeler segment, which is basically the Royal Enfield business. Royal Enfield volume growth was 27% and commercial vehicle volume growth was nearly 33%. And on the back of stronger sales, we are expecting good margin performance as well as better realization growth. In fact, we are expecting a 3 to 4% realization growth on a year-on-year basis. Of course, the key issues to watch out for, apart from the earnings, would be the new launches. How really is the demand shaping up for the commercial vehicle segment? How is the discount shaping up there? And also, how really is the expansion plan moving forward for the Royal Enfield end of the business, and how really is the market shaping up, especially what is the strategy on the export front. These are the points that we'll be watching out for apart from the earnings.
Okay, so a lot of factors to watch out for on Eicher Motors. Numbers will come out sometime during market hours today. Yatin, thanks for putting that into perspective as well. Well, that's all that we have on First Word today. But before we proceed to the day's trading session, a quick update on what we have lined up for you later on in the show. We review Blue Dart's Q4 earnings with Chief Financial Officer Aneel. Gambhir will be joining us first on Bloomberg Quint. Steel companies have been shining as inventory levels fall and prices have rebound from the March lows. Should we expect more price hikes? RK Goyal of Kalyani Steel would be joining in. And Deccan Gold Mines has surged in trade over a possible positive verdict from Supreme Court on the Hutti Gold Mines dispute. We chat with Sandeep Lakhwara to try and figure out what exactly is the decision of the Supreme Court and how will it impact Deccan Gold Mines. All of that coming up on Indian Open. Stay tuned.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Bloomberg Quint has tried to bring about a different approach to business news, economic news and equity market news over the last few months that we've launched. We are now adding a fourth large element to our coverage with the launch of Portfolio, a brand new personal finance offering with a very special bunch of guests to talk about how people can plan their financials and create a robust portfolio.
I need a return of around 10% just to deal with inflation. If over and above that, I have some modest goals around children's education, my own retirement savings and so on, it's very difficult to live in India without having a portfolio which is throwing off 15% with reasonable amount of regularity.
Choose stocks where the companies have a unique DNA to overcome evolutionary changes or disruptive changes, both inside as well as outside that company.
As the name suggests, Portfolio will try and address your portfolio queries. How should you allocate or asset allocate? and what should be the quantum within each of the sections to ensure that your portfolio easily enables you to meet the goals that you may have.
Welcome back. You're watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are faring at this point of time. Doesn't look the most attractive at this point of time. Japan is down half a percent. The Shanghai markets have opened with a negative bias, and Hong Kong is trading flat in trade. The SGX Nifty is indicating a negative outlook for our market, but there's still almost 45 minutes to go for our markets to open, so that could change in the meantime, because crude seems to be surging in today's trade, and that's the big worry that we're looking at. But Agam is here to tell us about what's happening as far as the F&O space is concerned. Agam, yesterday it was absolutely flat, but overall, what are the range that the Nifty is throwing for us?
Well, a very broad range, Darshan, based on the maximum open interest, but I'm going to start off with the futures, and very little change in the Nifty futures, as you can see here on the screen. But when it comes to the Nifty Bank, however, there has been some amount of strength coming in on the back of ICICI Bank, Axis Bank and SBI, because of which the underlying has moved up by nearly 1%, open interest surging by as much as 14%. The India Volatility Index did edge up higher, but this was expected as we move into the Karnataka elections. When it comes to the changes in open interest, however, we're seeing a little more base formation in the 10,500 put, and a little bit of continuation of trend as we've seen throughout the series, some unwinding coming along when it comes to the 10,000 call. But moving on, there is the One Housing Finance, which moves into the F&O band, so we are expecting restricted trade there. Two other stocks which I'm keeping an eye on the long side, Ujjivan Financial taking a little bit of a U-turn now, up as much as nearly 2%, 15% open interest added towards longs, and SRF has also seen some amount of strength with about 13% added in open interest towards longs. On the losing end, however, PC Jeweler once again shows up. We've seen near 15% added in terms of open interest, while the stock tumbles by as much as 16%. The most volatile counter currently in our markets. We'll just have to wait and watch whether or not there is some recovery or further selling in this one. But as far as benchmark indices go, well, at least as far as the indication of the SGX Nifty, that's negative for now.
Well, in fact, it's improved a little bit though, and the last few days SGX has ceased to become a lead indicator as well. But Agam, thanks for putting all of that into perspective as well. Some interesting moves there, and interesting stocks to monitor as well. We're just marking in the open as well. At the start of the show, how Jeevan, for example, has seen a flip-flop in the positions being built as well. Massive shorts a couple of days back, some long positions built yesterday, so all over the place really. But let's talk about well, the impact of rising crude on select stocks, whether KRBL and Aban Offshore, etc., get impacted. Hindalco and Novelis numbers and lots more. Gaurang Shah, Head Investment Strategist at Geojit Financial Services, joins us right now on the show. Hey Gaurang, good morning. Many thanks for joining in. This is Neeraj here. How are you factoring in the implications on select companies that will get impacted as a result of the scrappage of the deal, be it because of rising crude oil prices or be it because of now the inability to trade with Iran, specifically the rice companies?
Morning, Neeraj. The big question is how much you can trust the world leaders when it comes to these kind of deals getting signed off and getting called off in a matter of couple of years since they were signed, sealed and delivered. It's rather unfortunate, having said that. So it depends upon the fine print of the sanctions that will be implemented as spoken by the POTUS, 45th POTUS. So remains to be seen as to the fine print of the sanction. But yes, crude oil prices could definitely inch up higher given the kind of sanctions. And more importantly, Neeraj, I think one needs to just wait and watch. Minus the US, can Iran and other nations along with UN who have signed, sealed and delivered that particular agreement could be salvaged or not? So I would give it a little bit of more hope that possibly the other world leaders could sit across the table and iron out the deal. But yes, the sanctions from the US, as spoken by the President of United States of America, could possibly have at least short to medium term or at least intraday or a couple of days overhang on all those companies which are actively involved into export of rice to Iran. And again, on the crude oil side that you were mentioning, we are at 77, closer to 77 on the Brent, above 70 on the NYMEX. This also plays a havoc for the Indian economy because on one side you have crude on the boil, on the other side you have a weak rupee against the dollar. We have crossed 67 as of yesterday's closing. So these could create some amount of negativity, depending upon, of course, how well we manage our oil pool account.
Gaurang, what did you make of Jubilant Food numbers yesterday? The numbers were rather robust, but the stock ended pretty much at the day's low. So do you think that, valuations are now running ahead of the expected growth for the company?
So let me say this, post the IPO, this is many years back that we initiated a coverage on Jubilant Foodworks, and on fallback of delivery, we raised our targets on the higher side. Then we had the unfortunate exit of Mr. Kaul, replaced by another head. Business strategy was changed. Focus was into the core business. Balance sheet heavy on the expense side. Business verticals like Dunkin' Donuts were slowly, steadily eased off. Unviable stores were closed down. Focus was more onto the stores which were contributing to the triple SG, that is the same store sales growth rate. And of course, now we have a renewed, focus and business strategy. And the most important thing is that despite the food inflation spike, they have been able to maintain the margin because very convenient and easily they pass on all those price hike to the end consumer. In terms of valuation, it has run up a tag bit, so you could possibly see some amount of consolidation, but yes, we remain optimistic on the stock. If you ask me whether one should buy it at current levels, I would say no. If you ask me one should buy it in a phased out manner, I would definitely say yes, because we maintain a positive view on the stock. And after yesterday's number, not to forget, you have large population of India which are close to about 35 years of age group, workable force, bent towards the quick service chain, services like Jubilant Foodworks and Wetlife. So my sense is that on dips, you could slowly and steadily accumulate the stock.
Okay, Gaurang, just hold on. Our research team is ready in terms of which are the stocks that you need to watch out for. A lot of companies came out with a decent set of numbers. SKF, Whirlpool, Syntex came out with a decent set of numbers, while companies like ABB managed to disappoint in trade. Obviously, the big news also coming in terms of Novelis, that is Hindalco subsidiary, coming out with decent set of numbers. Brokerages have given that the thumbs up. So we'll start with that. Let's start with Novelis. Novelis came out with numbers. What's the impact on Hindalco and what are the brokerages saying?
So we're expecting a positive reaction on Hindalco in line with performance number, but then they were the performance sustained that we saw in the previous quarter. It was a high performance that the company delivered. Shipment rose as much as 2% year-on-year basis, and almost a flattish growth in terms of volume to a number of around 805 KT. EBITDA per ton rose 7% year-on-year basis and 3% sequentially to $396 million. Net debt declined 16% year-on-year basis. Net debt to EBITDA, that declined as much as to 3 times as compared to nearly 3.9 times that we witnessed in the corresponding quarter. Better volume and favorable product mix and operational efficiency led to inline performance from the company. FY19 capex was guided at around $450 million, out of which $250 million was earmarked towards debottlenecking, auto finishing line, and the remaining also for auto expansion. Edelweiss says it has maintained the buy rating, and the potential upside for the counter for Hindalco is 36%. Says in line with estimates numbers, focus remains on auto segment, which is a positive, and it also also highlights the fact that management is now further seeing huge penetration in terms of the auto segment in China market. Macquarie also has an outperform rating on Hindalco and sees an upside of nearly 27%. It says that the margin tailwind and deleveraging is expected to continue in FY19 for Novelis. And last, we have Citi, which says that although the company has not provided any sort of guidance coming in terms of the cost terms, but the company continues to evaluate further growth opportunity, which is a positive factor, and it continues to prefer Novelis as it is less leveraged, and also the increased auto exposure is positive for the company.
Okay, so we'll watch out for Novelis that came out with numbers. So Hindalco is the stock that we need to watch out for. Lots of other companies came out with numbers, some news also. So Shraddha, which are the stocks and news, and a couple of weak numbers also came out in trade yesterday.
Yeah, so Darshan, I'm going to talk about IDFC first, and that's on the back of a Mint report which says that Reliance Mutual Fund and BlackRock are now leading the race for IDFC AMC. There have been a couple of reports on this front as well. So IDFC Limited in focus. Tata Steel, which has said that European Union business has begun the process to sell non-core businesses, 5 of them. I don't know how much of a difference that will make to the stock price right now. But there are a couple of interesting bulk deals. Enkai Wheels, where Blue Lotus Capital Multi-Bagger Fund has bought 0.6% stake. You have Everready Industries, where Amansa Holding has sold 1.3% stake. The stock already ended sharply lower yesterday, but let's see if we see further pressure today. PNB Housing Finance, we knew that Carlyle Arm has wanted to and has sold about 4.8% stake via multiple block deals. What is interesting is the name of the buyer. General Atlantic Singapore Fund has bought 1% stake. They are already existing investors, so they've actually upped their stake in PNB Housing Finance. And lastly, Sri Renuka Sugars, where promoter Khandepar Investments has sold 2.3% stake. So again, a lot of interesting bulk deals.
Okay, so that's something. And Agam, a lot of companies came out with numbers after market hours. Which are the exceptional ones?
Yes, plenty actually, Darshan. I'm going to start off with the ones which have had steady numbers. Well, we've had ABB, 17% growth on the top line, and margins remaining flat around 7.5%, but net profits have moved up 14%. Whirlpool of India, again, very strong earnings coming in. Revenues up 24%, net profit up 23%. However, margins are at around 11%, a little bit of contraction there. SKF, again, mixed earnings because revenue growth, single digit 8%, but profit again improved because of 24%. So we have seen margins at around 15%.
Hold on. I think we have the management of KRBL joining us. Neeraj, you want to take that?
Okay, fine. Yeah, let's try and do that. Aneel Mittal, the chairman and managing director of KRBL, joins us right now phone line on the possible implications of this US pulling out of the Iran deal. Mr. Mittal, thanks so much for joining in. Can you first tell us, I mean, you would have studied the implications of this before this was even announced, because everybody knew this was going to happen. What kind of impact would it be for rice exporters from India into Iran?
Yeah, first of all, good morning to you.
Very good morning.
First of all, these sanctions are going to have some relaxation. It is not the final output which has come. Definitely they are pulled out. But if you see in the past also, in couple of years, whenever there are sanctions on any country, essential commodities are always out of the sanction, especially food item, essential medicines and all those type of things. So as far as rice is concerned, it is a staple food in Iran, and this is going to be out of the sanctions plan. That is number one. And that is the reason about a month back, Iran gave a special concession to the rice industry, or special as a food industry, that they will give the foreign exchange at a very concessional rate. So I don't feel that as far as rice basmati is concerned, it will impact anything as far as the sanctions are concerned.
Well, currently, how much do you export to Iran?
Iran, we are exporting, we are not exporting much to Iran, maybe 4 to 5% of our total turnover.
Okay. Mr. Mittal, I would presume what you're saying about rice being kept out of sanctions is a guess. It may be an informed guess or an educated guess, but it's a guess nevertheless, right?
No, but we are talking on the past experience. If you see, it is not new. For the first time, sanctions are being imposed in Iran. Now, for example, North Korea has so many sanctions, but for food items, for essential medicines, they are out. Same way for Sudan, so many countries which are in Kenya, which are under sanctions of the American government. But essential commodities such like food and medicines are always out of the sanctions.
Okay.
And it is not for the first time. If you look the last 10 years with Iran, rice and medicines are always out of the sanctions.
Okay. So you export about 5% of your total turnover to Iran. Would you believe that there is scope for this to move up or down because of the economic conditions of Iran? I can understand the sanctions is one thing. What's the kind of move that you've seen? Because post US post Barack Obama signing this deal with Iran as well, I think Iran had some self-imposed sanctions or no import deals which were then clarified later on. I think you've been exporting to Iran only over the last 1 year, if I'm not wrong.
No, we are export. We used to export only 1%, 0.5%, 2,000, 5,000 tons. This year we might do 20, 25, 30,000 tons, which is practically only 5% of my total exposure. But one thing I agree with you that as far as the payment problems and bank positions are concerned, they will become more tighter. That is number one. Petrol prices, but see, their main income is from the crude and other byproducts. Financially, they will come into problem, there is no doubt. Now, how they settle this matter for the payment of essential commodities is to be looked out.
You go slow as a result of this? Would you be cautious when you're doing the next set of exports to Iran?
No, we do 100% against 10% advance or 100% against confirmed LCs and all. We don't give any credit to Iran.
Okay, so things may not be as bad as it may seem for rice exporters, at least, Mr. Mittal. That's what you're saying.
Yeah, 100%.
Okay.
100%.
Okay. Last question, Mr. Mittal. The last couple of days, there has been a sharp surge in your stock price. I know you don't monitor stock prices, but just wondering if there has been some announcements that we may have missed.
No, there were no announcements. It is all market-driven and the investors' interest. Tomorrow is our results, and let us see, because as far as the company is concerned, we are doing fantastically well. And let me tell you, in this segment of the industry, especially basmati rice, there is no other competitor today, including any other. The nearest competitor is also not nearby as far as KRBL is concerned. Tomorrow, when the results come, you will yourself see we are progressing in the business. I don't know why the share market has come down and what has impacted the investor. I do not know about it.
Okay, Mr. Mittal, thank you so much for speaking to Bloomberg Quint. We'll leave it at that.
Thank you.
Thank you. Okay, time to get in the technical views on the show. Gaurav Bissa, Assistant Vice President at LKP Securities, joins us on the show. Also joining him on the show is Chandan Taparia, Associate Vice President at Motilal Oswal Security. Good morning to both of you for joining us on the show. Gaurav, let me start with you. Your broader view on the Nifty and the Bank Nifty.
Good morning. Nifty has given a good closing. 10,700 has been proving as a strong resistance area. We have again closed around these levels only. So it can test levels of 10,800, 820 in coming days. The more interesting aspect, and that is what I keep saying, is the Bank Nifty. It gives you a much better picture, much clearer trades as far as options are concerned. That is looking quite robust. It has given a small breakout about 25,950, 26,000 mark. It can now head towards 26,500, 550 kind of levels. The lucrative strategy would be to buy Bank Nifty on dips. We have seen that AGS is pointing at some 30 points cut. In that case, even Bank Nifty can see a 100-point fall coming in. I think that can be a lucrative price point. One can buy a call option for that matter and a weekly call option. I think that can be a good strategy. Going ahead, I think both of these indices are very strong. They have given a breakout option-wise. They also given a breakout technically. So in coming days, we can see some further upside in the indices.
Okay. Chandan, what are your thoughts? How are you approaching trade today?
Yeah, good morning. Looking at the market, just 2 days back, it managed to hold support of 10,600. And day before yesterday, it managed to hold 10,638. So supports are gradually shifting higher. But on upside, it is multiple hurdle because of the hurdle at the Bank Nifty index. So as of now, trend is positive, but I'll go for buy on decline strategy. If it comes near to 10,680, 10,670 zone, then I'll buy with a stop loss of 10,638. There is a major support because earlier market was consolidating between 10,500 to 638 and given the breakout by crossing 10,638. So my strategy buy on decline near to 10,680, 70 with a stop loss of 638 and wait for upside target towards 10,780 levels.
Okay, Gaurav, which are the strategies that you're recommending for today?
Bank Nifty weekly call option at 53. It's closed around 65 rupees, but as I mentioned that with the kind of SGS pointing at 30-point cut, there's a possibility even Bank Nifty may see a fall and we can get it around 53. One can have a stop loss of 38. Target would be 75. Second would be buy on South Bank, South Indian Bank. It has now come out of the consolidation, has seen about 2-3% O addition happening. Good amount of longs are seen getting built. Option wise also we are seeing good amount of range shifting from 25 to around 30 odd marks. So it can head towards 30 levels. For immediate targets of 28, one can buy South Bank futures for small stop loss of 26.8. Third would be sell on Ambuja Cements. it's seen a good amount of correction, 12% over addition happening yesterday, good amount of shorts, almost on the verge of a good breakdown on daily charts. One can have a stop loss of 235 for an immediate target of 224.
Okay. And Chandan, what about your strategies?
Yeah, as I mentioned about Nifty, I'll go with buy on decline. And talking about the Bank Nifty, it has seen the strong momentum in last couple of trading sessions, and it has been closing on a positive note from 8 consecutive trading sessions, even after a small decline in the Nifty index. So clearly outperformance is visible. Just a couple of days back, it formed an inverse head and shoulder pattern. And earlier in the entire leg of last 2-3 months, it seen correction of 4,000 points, and it almost completed 61.8% retracement of recovery of 2,500 points. So 61.8% is very important for the Bank Nifty that comes near to 26,100 level. So if it manages to hold, then the next leg of rally would start, which may take it to 26,250, 26,500 plus kind of level. So one has to cleanly watch the 26,100 kind of level for the Bank Nifty to see the next leg of momentum. So as of now, the positive bias on both the indices. And talking about the stocks, we have seen the buying interest in banking and FMCG counter. So here I'll go with the FMCG. Trade will be buy on Pidilite. Major trend of the stock is positive, making higher top, higher bottom formation on weekly chart. On daily scale, it has seen the consolidation, even trading at lifetime high territory. It managed to respect its multiple support to 1,070, 1,075, and seen the significant jump in the trading volume and the delivery volume. So recommending to buy Pidilite on a small decline with a stop loss of 1,079 and looking for an up move towards 1135 kind of level. Second trade is buy on KPIT.
Okay.
KPIT is a strong trade, so recommending to buy with a stop loss of 253 for upside target towards 273 levels.
Okay, so we'll watch out for those stocks. Just hold on because we are on to our special segment Bloomberg Edge, where Jayesh Kalyani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on your radar today?
Morning, Darshan. I'm watching out for Hindustan Zinc. That is because one, the analyst target price is nearly 12% higher from where the current price is, and there has been an interesting chart pattern formation called as the outside-inside formation on the Bollinger chart. That's the last 3-month chart of Hindustan Zinc. But let's have a look at how Bollinger Bands actually work and what is the outside and inside pattern formation. Well, Bollinger Bands, they show you the expected trading range where the stock is likely to trade, and there are 3 lines which get plotted. So you have an upper band, a moving average, and a lower band which get plotted on the chart. Now, what it actually implies is when the bands expand, it is said to be in a trending market, and when the bands contract, the stock is likely to be in a sideways or a consolidation movement. The outside-inside pattern formation that I was referring to, so you have to look at the most recent 2 candles that are there. The first candle has to close outside of the band, and the second candle immediately next to that one has to close within the band, whether it's on the upside or on the downside. Let's have a look at how the chart of Hindustan Zinc looks like. So the blue line is the upper band that I was talking about. The white line is the moving average, and the yellow line is the lower band that I was speaking about. Now you see the last 2 candles over here. This candle has in fact closed outside of or below the yellow line, and the immediate next candle, which is as of yesterday, that has come back inside the yellow band, which means that there is outside and inside pattern formation, giving it a potential buy signal.
Okay, Jayesh, thanks a lot for that. Gaurang, the Bloomberg terminal is indicating a buy signal on Hindustan Zinc. Any views that you have on this company?
So I think we've been positive on the metal pack for a very long time, and on Hindustan Zinc and Hindustan Copper, I think we recently came out with the buy side coverage. And along with that, we remain extremely positive on the stock that you were just discussing with your colleagues in Dalco, Vedanta, Tata Steel, JSW Steel, Nalco, Steel Authority of India. And let's face it, I think if we have to, go and move closer to that 7.58% GDP growth rate, then our view is that you cannot do it unless and until the government spends a sizable amount of budgetary allocation towards the infrastructure development, because the current condition as is where is saturated as far as the infrastructure is concerned. And you also have a elaborated plan laid out by the government in terms of Udan 1, Udan 2 connectivity, new airports, defunct airports being operational, ports, highways, expressways, dedicated freight corridors. So my belief is, and of course the entire revamp of the real estate sector under the RERA, should throw in positivity as far as the domestic consumption is concerned. And I'm not too disturbed by the noise that comes in from the US or China for the metals prices in the international commodity market, and whatever news flows China recently has been a tailwind positive for the Indian metal sector.
Okay, we'll watch out for Hindustan Zinc in trade, but a new IPO is on the block. Mumbai-based IndoStar Capital Finance is headed to the primary market. The NBFC, backed by Everstone Group, is looking to raise 1840 crores through its public offer. Shraddha Babla is standing by to tell you all that you need to know about the company ahead of the IPO. So Shraddha, take it away.
Well, in terms of the key IPO details, the price band has been set at 570 to 572 crores. At the upper price band, they're looking to raise 1,844 crores, which implies a post-market capitalization of nearly 5,200 crores. Now, out of that 1,844 crores, the fresh issue will be of 700 crores, which will go to the company, and they will use it to expand their loan book into the newer segments that they're looking to enter. And about 1,144 crores is offer for sale, a large part of it coming from the promoter entity, which is called IndoStar Capital. So the promoter stake will fall from the current 91% to about 59% after the issue, and there are also some other shareholders who are going to be participating in the offer for sale. So that's as far as the basic IPO offer details are concerned. This is a Mumbai-based company, a relatively new company. They've started operations only in 2011, and they're backed by the Everstone Group. Goldman Sachs also has a small stake in this company. What do they do? Well, a large part or chunk of the portfolio is corporate lending, and of that corporate lending portfolio also nearly half comes from real estate lending. So 77% comes from this portfolio. Another 22% or so comes from SME lending. Again, this is a business that they started in 2015, and in September-October 2017, so just recently they have made their foray into home and vehicle finance. So currently it's a very small part of their portfolio, but this is what they're really looking to expand.
And Shraddha, how are the financials, and what are the brokerages saying about the valuations and whether to subscribe or not?
Well, with respect to the financial picture, the growth numbers do look strong, because if you look at the CAGR that the company has been able to do over the FY13 to FY17 period, the credit exposure has grown by 30%, net interest income by about 28%, net profit at 24%. Even if you look at some of the other parameters, the gross NPA number, that has continuously year over year expanded or risen to about 1.7%, but still that 1.7% number looks like a reasonably manageable number. And net interest margins are strong at about 6.9%. When you look at the return ratios, they seem slightly inferior. If you look at the ROEs of about 10.9%, and if you also consider the capital adequacy ratio of about 31%, that tells you that probably the balance sheet is underutilized to some extent, and the management has been cautious in lending. So all of that seems to be weighing on the return ratio profile of the company. Now, if you look at how the valuation stacks up and how it compares to some of the peer group companies, at the upper price band, the asking price to book valuation for the company is 1.9 times. If you look at some of the SME players like Capital First, Shriram City Union and Mass Financial, they're trading at much higher valuations. Piramal Enterprises, which is a corporate lender, especially with a large retail focus book, is also trading at much higher valuations. Having said that, these companies are not directly comparable because there's a huge difference in the business profiles, but analysts do believe that a valuation of 1.9 times seems reasonable. But overall, there's a mixed verdict as far as brokerages are concerned. Aditya Birla, Angel, IIFL, HEM Securities, all of them recommending a subscribe. And on the other hand, you have the likes of ICICI Direct, Antique and Choice Broking, which have recommended an avoid, and that's mainly on account of them believing that the retail foray, the company has just made the retail foray, and that will take time for the company to execute and play out, so you would rather wait and watch. So that's a mixed verdict coming in.
Okay, thanks for that, Shraddha. Gaurang, not on this IPO, but a quick, we have less than 40 seconds for the market to start. Quick thought on what NBFC would you buy?
Well, if it comes to vehicle finance, commercial vehicle finance, Shriram Transport Finance, and one more company which came out with a stellar set of numbers just a couple of days back, which I've already spoken about on your show and Ask BQ, is L&T Finance and Holding.
Okay. Interesting. So a couple of names. Gaurav was even quicker than what I thought, but yeah, a couple of those names Gaurang believes people can buy into. Remember, the brokerages on IndoStar are mixed or a divided house completely, so don't quite know what will happen. You studied this one?
No, not too much actually.
Okay.
So it seems that valuations not too supportive, and most of the brokerages have given an avoid on the counter. So that's about it. And mainly, majority of it is in the corporate lending, especially real estate. So I think that was one of the key reasons that brokerages are saying that. But you never know. I'm not aware of what the pre-market premium is, but it'll be interesting to see how the subscription number comes out.
Well, let's wait and watch. The pre-open rate's about to kick in, and seems like we'll start off on a slightly muted note. The SGX Nifty's come off a little bit from the lows of the day, but here's what the markets are doing in the pre-open session. Well, a mixed bag right now. Let's wait and watch what happens there. Bring up the oil marketing companies and see if they are reacting at all. We'll also try and show Jubilant Foodworks had some bit of short build-up late trade yesterday, and let's see how that is doing. OMCs, well, for now, seemingly starting off on a negative note, or likely to start off on a slightly negative note. NTPC has this odd downtick. I don't think that will last. And Indiabulls Housing has this 3% uptick, which I doubt will last or no. I'm sure there are a lot of results that will be reacting. We'll bring them up. I just want to mark one thing, which is what's happening to Jubilant Foodworks and companies like KRBL, if anything. And let's just see what's happening there. Jubilant Foodworks, well, for now, 2.5% higher. Let's wait and watch. And KRBL LT Foods, sentimental downticks. The management said that there is zero impact on the business. Rice will be kept out of the list of sanctioned items. Maybe that will hold true. For now, the rice company is not reacting adversely.
Yeah, so other companies that we need to watch out for, some of the strong numbers that came out. SKF came out with a decent set of numbers. So let's pull that out and see how it's doing in pre-open. It's flat in trade. Syntex Industries, Automotive Axle, both of them were decent in trade. So Syntex has reacted positively, it's up 4%. Automotive Axle is also higher in trade. Sadbhav Infra and Whirlpool India, these are the two counters which also came out with fairly decent set of numbers. So Whirlpool is flat in trade, and Sadbhav Infra is starting with a negative bias. Phoenix Mills was in line, Huhtamaki Paper was in line, so probably won't react too much. Let's pull up ABB. Now there was a growth that was seen, but it's still coming below the analyst estimate, so it starts slightly weak. And Sun Pharma Advance was also slightly weak in trade. So let's see how Spark has. It's down 1.6%. Hindalco, let's pull it up. Novelis posted strong numbers, so how that will pan out in trade. And Everready is another counter I want to watch out for. Yesterday hit a fresh 52-week low. It's managed to move out post Amansa selling some bit of stake in the company. So that's about what's happening.
I just need to mark the rupee, though. I think that's the big mover. I don't know if it's got to do with dollar strength across, but there is a sharp 0.5% downtick on the rupee, 67.36. This should be honorable now. It's been a sharp one-way slide for the rupee, all the way from what, 64.85, 65, all the way to 67.5, almost 67.5. This is what's happened today. I mean, just look at it over the last 1 month and you will see the sharpest slide that we've seen in the rupee in a really long time. This is well, pretty steep, you would have to say. 67.37. You would argue that it's got to do with dollar strength across, but that notwithstanding, the rupee is certainly weakening, in line with arguably some of the other countries like Indonesian rupiah or the Filipino peso. But having said that, there is a bit of a depreciation for sure. We'll talk about this in a bit. First, get in Somit Sarkar, who joins us with the big brokerage calls for the morning. Somit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Jefferies on Nugent Software. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 305. Now, Nugent Software, which has a well-established product suite and is a market leader in the BFSI segment in India, is expected to benefit from the continuing shift towards digitization. Other than this, more revenue from existing customers, better traction in US, expansion to new verticals, and momentum in government contracts in India is expected to boost the company's revenue going forward according to the brokerage. Now, the brokerage is expecting the company's revenue and EPS to grow at a compounded annual growth rate of 23% and 27% over FY18 to FY20. The brokerage is also expecting economies of scale to drive the margin expansion for the company going forward. The company has unusually high receivable days of close to 200 days, but according to the brokerage, management is addressing this issue, which will further boost the company's working capital requirements going forward. Lastly, the brokerage says that the current valuations are reasonable given the strong growth prospects that the company has, and it also has a bullish target price of 380 rupees on Newgen Software. Second, we have is Credit Suisse on Jubilant FoodWorks. Now, the brokerage has maintained its outperform rating on the stock, but has raised the target price to 3,050 from 2,750. Now, according to the brokerage, the company has delivered a strong fourth quarter results. EBITDA margins of the company expanded by close to 650 basis points, mainly on the back of operating leverage from high same-store sales growth, lower Dunkin' losses and cost-saving measures. It also says that the same-store sales growth was exceptionally strong at 27% even after adjusting for the base quarter. Lastly, it says that going forward, the company is expected to maintain double-digit same-store sales growth and margin expansion in FY19.
Okay, thanks for that, Somit. Gaurang, do you track Automotive Axles? Came out with a decent set of numbers yesterday. Do you track this counter?
Well, I've been following the company, but we don't have a coverage, so I can't comment on buy, sell and on. But let me say this, I think it is one of the best managed companies in the auto ancillary pack. I've got great execution capability and capacities. And my sense is that if one is positive on the auto, then it gives no reason why one should not be positive on auto ancillary OEM and tire manufacturing companies. And in fact, minus this company in the OEM segment, we remain extremely positive on a couple of names. Bharat Forge, Motherson Sumi, Mahindra CIE Automotive, both the battery manufacturing companies, that is Excite as well as Amara Raja Battery, and the entire gamut of the universe of tire manufacturing companies, we remain extremely positive.
Okay, Gaurang, we'll leave it on that note. Thank you so much for taking the time out and speaking with us today. And thanks for your comments. Really appreciate it. That's the view from Gaurang Shah of Geojit. By the way, just before we get in, Deven Choksey with his thoughts, just a couple of quick comments really on some companies from Chandan, Taparia and Gaurav, Bissa. Boy, look at HPCL. We're still not done with the pre-open rates, but there's some sharp downticks that have come into the OMCs. HPCL is down about 8%, BPCL 3%, in Indian Oil 2%. It's a take and go between what would happen fundamentally to these companies because they import some proportion of the crude from Iran. But I believe that would be the one reason why these stocks have done. We'll get the fundamental view there, but a technical view on that. And then Asian Paints, which has started off about 1% lower as well. So these four are the top losers. Chandan, to you first. The oil marketing companies, looking at the pre-open session, would you trade any of them? 2.5% downticks right now.
See, first looking at their major trend on monthly and the weekly basis, these are continuously making lower top, lower bottom formation. However, we have seen some stability as these companies have made some double bottom kind of formation. Especially if I talk about the HPCL, it made bottom near to 285 but failed to surpass its hurdle of 311, 312 kind of level. So again, it may consolidate. If it breaks 285, then only I'll continue with the negative side. For positivity, I'll have to see whether it sustains above 310 or not. So 285 will be the support if it comes lower and we have to buy. But the conviction or the fresh buying would emerge only about 310 kind of level. Similarly, in case of IOC as well, most of the oil marketing company has seen some stability in the last 2 or 3 weeks, but follow-up was missing. So that's why most of these may start the next leg of rally on the downside. Talking about the Asian Paint, however, because of the crude, some negativity could be seen. But again, here I'll be buy on decline because recently, couple of days back, it has given the breakout from its falling supply trend line. It has also given the breakout from rising channel. So I'll wait for a decline here to 1180. There I'll go for bargain buy to again initiate the long position to 1220, 1235 kind of level.
And Gaurav, your view on pretty much the stock of yesterday, Jubilant FoodWorks. It's been going up one way, but what are the charts and F&O trends indicating? Is there a possible reversal here, or will this continue on its upward journey?
It added a good amount of wrong positions. Let us not discuss about what happened yesterday. The quarterly numbers, there was incremental volatility that was expected, and even with that, it has closed around the breakout levels of 2580, 2600. I would be a buyer if it goes on to the level of 2580, 2590, stop loss of 2520 on the upside. If it sustains these levels, I would not be surprised if there is a 5 to 8% upside coming in the current series itself.
Interesting. Okay. Let's get in Deven Choksey with his thoughts on the markets as well. Deven, the world is agog about US pulling out of the Iran deal and the possible implications on crude or some of the others. We had a couple of global experts, all of them were saying that they would expect crude prices to go up over the course of the next 1 month and the next 6 months as well. If that were to happen, implications thereof, today the markets seem to be already nervous about the oil marketing companies like Asian Paints and some others.
Yeah, Neeraj, good morning. It's a situation of uncertainty once again, I think, which has got created because of this particular decision of America. And certainly, I think it will have its impact onto the user industry more than any other industries in particular. All in all, I would say that I think all the crude oil derivatives, particularly I think which are used in the petrochemical, specialty chemical industries, they would find, I think, the cost going up and ultimately resulting into higher amount of cost for the industrial products. Yes, I think we will have to wait and see as to how these costs are being absorbed, passed over to the end customer. But as of now, I think it appears that I think this is going to be a situation of some amount of pain going forward. Though my personal view is that I think the crude oil's inherent demand is not growing, and any move of crude oil to go up because of any kind of a supply shortage or artificial shortage getting created, I would think that it will not sustain in the long term. But maybe in the near term, you never know. Near term could be 3 months, it could be 6 months also. You never know what kind of price dynamics I think it can assume. So I think we'll have to wait and see. But yes, I think it's a situation of uncertainty. We are seeing the impact, negative impact also coming on to the current account deficit situation, and as a result of it, even the rupee is slipping for the first time. I think it is losing its strength. So to a greater extent, I think this is going to have the repercussions which are going to be far beyond the visible repercussion that we are seeing currently in the user industries.
Okay, just minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. Eicher, Arvind Mills, Federal Bank, JSPL and OBC are amongst the companies that will report their numbers today.
SKF, Syntex Industries, Automotive Axle, Sadbhav Infra and Whirlpool have reported strong set of numbers.
And conversely, ABB India and Sun Pharma Advanced Research report a weak set of numbers, while Huhtamaki PPL, Mahindra Holidays and Phoenix Mills report a mixed set.
Hindalco in focus as subsidiary Novelis posts strong fourth quarter number, is the biggest gainer on the Nifty currently.
Amansa Holdings sells 9.8 lakh shares in Everready, while promoter sells about 2.3% stake in Sri Renuka Sugars.
Jeffrey initiates coverage on Newgen, indicating a 19% upside, while Goldman Sachs downgrades Jubilant Foodwork to a neutral from a buy.
Well, some interesting names out there. Let's wait and watch what happens. Deven, the QSR space, the same-store sales growth seems to be really active. What did you make of what Yum Brands did and what Jubilant Foodworks has done yesterday?
Well, I think the numbers of Jubilant Food in comparison on year-over-year basis definitely looks, I think, quite interesting. And we'll have to be studying this particular number a little bit more in detail as to whether that could sustain going forward. Largely because I think the last year the base went little low due to various reasons in that particular period. But my reading says that I think if they have to sustain at a higher base, which they have produced in current quarter, I guess I think they will have to show distinctly different strategy than they were carrying out in the past, which means that I think they will have to be nimble-footed in bringing out the new product, particularly the consumption taste, which is changing very fast in this particular format. So they will have to bring out the new food items, I think, very quickly onto the shelf and to the delivery. I guess I think that's where one will have to keep an eye on. As of now, we don't have the coverage, so won't be able to give specific view on the recommendation side.
Chandan, we are 1.5 minutes away from opening. Anything interesting that you're spotting in the pre-open trades?
Yeah, we'll have to check the opening and the reaction on the Bank Nifty and selective oil marketing company because of the crude price. But what I believe, some IT stocks looks strong, especially if I talk about the KPIT, Tata Elxsi or NIT Tech. We have recommended to go long on KPIT, and I can add one more name that might be the Tata Elxsi. the stock has exactly taken support and turned higher on last trading session. So here we may see a move towards 1210, 15 kind of levels.
Okay, and Gaurav, anything that you're spotting interesting in the pre-open rates?
I think SRF is one that can be on the radar, and if it sustains the pre-open prices of 2395, 2400, it can test levels of 2450 today itself. One can buy with a 1% stop loss.
So I think Tata Elxsi and SRF are amongst the top calls by both our experts. Gaurav, would you have a call on the bank Nifty if somebody has long positions? Should he continue? Quick 30-second call.
One can have a trailing stop loss of 25,930, 940 on the spot side. I think that should be held, and if it's sustained, I think it garners a fresh by about 26,000 mark.
Okay, gentlemen, stay on. We'll take in one quick thought post-market open from Chandan and Gaurav as well. And Deven Choksey requests you to stay on. A fair bit of conversation with you left on the market, the mood and the implications of a lot of other factors as well. So that's coming up. But 10 seconds left for the markets to kickstart trade today. The pre-open rates have shown their hand. We'll start off marginally off. The Nifty Bank too, after days and days of a correction, of a move up, could see a little bit of a correction today. Let's wait and watch if it worsens or if it stabilizes. But on expected lines as per the pre-open rates, about 0.25% lower. The Nifty Bank though corrects about 0.5%, so a bit of a sharp pullback really. But remember, it's an index that's gained quite strongly over the last few days, so maybe this was par for the course. The mid caps and the small caps too, I reckon, would have started off marginally off. Flat for the small caps though. The mid caps about 0.2%. The heat map, I believe even Stevens, or maybe marginal bit of red over the green on the Nifty. Yeah, marginally higher, the quantum of red in the green, but the OMC is right out here. Very interested to get Deven Choksey's views once again on these stocks. But just look at these names. All of them have started off on a weak footing. Banks and financials look slightly wobbly. HDFC, SBI, ICICI Bank and HDFC Bank, Kotak Bank too. No surprise the Nifty Bank isn't exactly gung-ho. On the flip side, on expected lines again, or rather you would believe that this would happen. Tech companies are up and about. This would also be the factor of what's happening to the currency. Typically trade tends to move out there. Day traders would tend to do a little bit of day trading on the IT names as well. Pharma is up there. Hindalco, because of Novelis numbers, Darshan was speaking about it, up about a couple of percentage points. Quickly, 2 or 3 pockets that I want to mark before I hand it over to Darshan for what's happening across the market universe. Some newsmakers and some market movers. Firstly, companies that reported a strong quarter, and the one name that stands out has to be Automotive Axle. Very strong reaction to what's arguably turned out to be a very good quarter from Automotive Axle's side. So a good start for this one. Let's post companies which have come out of the weak quarter. So Spark about 3% lower, and ABB is starting off about a couple of percentage points lower. Lastly, companies ahead of the numbers, and let's try and see how they are doing in the session today. All three of them lying absolutely flat. The markets though absolutely flat as well. The Nifty just about 10 points lower. Darshan, what are you spotting?
When we speak about the oil marketing companies, we speak about HPCL, BPCL, IOC, but on the oil space, Chennai Petro is another FNO stock which has reacted severely negative to the news. It's down 5% in trade. So has MRPL. Century Ply is another counter which is down in trade. The duo Vakrangi and PC Jewelers, both of them trading much lower this time around. Despite the management saying not too much of an impact, KRBL continues to go in lower today in trade. Spark reacting negatively to the numbers that came out. So that's what's happening as far as some of the counters on the losing side is concerned. Let's just pull out some counters which have managed to gain in trade. Oil India is moving up in trade, so let's also pull up ONGC and Oil India because of crude. Let's see how they have managed to move up. First Source Solution is interesting. Post the numbers, it managed to correct but has recovered most of the losses, trading with a positive bias. Surprisingly, Aban Offshore is trading with a positive bias despite the news of Iran probably being negative for it. And ahead of the numbers, interesting to see Jubilant Life reacting positively. Jubilant Life has been taken to the cleaners from the last quarter it reported numbers. So some bit of consolidation happening. Tata Elxsi is another counter which looks rather interesting on the charts also, trading up almost 2%. So that's what I'm spotting currently, Neeraj.
Interesting. Okay, before we continue our conversation with Deven Choksey, some final thoughts from both Chandan, Taparia and Gaurav, Bissa. Chandan, anything that looks interesting in the first 3 minutes of trade? If a call on the Nifty Bank, then that. If on Hindalco, then that. Or anything else that's come up on your screen?
Yes, again, first Nifty managed to respect 10,680. So if it holds here, I'll continue to be on buy side. And positive on the selective IT and metal name. As mentioned, will be positive on the Tata Elxsi, KPIT, NIT Tech. Expecting this stock to continue their momentum to of around 2 to 5% in next 1 or 2 trading session. And again, if you want talking about the metal, will positive on the Tata Steel, Jindal Steel. However, result is there from Jindal Steel, but if that is good, then may continue the momentum. So one can look at the IT and selective metal counter. And Nifty 10,680 is the support.
Yeah, well, metal stocks are certainly up and about. Gaurav, anything that catches your eye?
Sorry. Federal Bank is one that is looking good. After a brief bit of consolidation coming out of a breakout, 105 call option come on a decent OI concentration. So option wise also we are seeing a small breakout. It can head towards 109. One can have a support of 103 or 103.5 and buy Federal Bank.
Okay, gentlemen. Thanks so much both of you for joining in today and giving us your thoughts. Really appreciate. Well, back to Deven Choksey. And Deven, while we spoke about the Iran deal and the implications thereof, the OMCs have started off fairly negatively. Now, but two ways to look at it. One is that crude prices, if they are slated to head higher, could have a bearing. The other would be, from whatever little we learn, that the Indian OMCs in particular import a fair bit of crude import from Iran as well. Would there be a double implication for the OMCs, and therefore are there some serious implications for investors in these companies?
Well, I think if I have to study this particular subject, the higher increase the crude oil prices is leading into two things. One, of course, I think the working capital requirement for most of the OMCs will go up, and so would be the requirement to, I think, shell out more currency. I think that is also equally important as far as the government of India is concerned. And the cost of that currency, I think, is going to be hurting as well on the other side. The general theory is that they will pass it over to the end customer. However, reading says that I think the entire cost can't get passed over, particularly the other than the direct cost. I think would probably the companies will absorb, which I refer to as the currency cost, maybe I think inventory cost, maybe I think the working capital cost. I think that's where the companies will probably struggle, and there the margins would come under pressure. Not to forget one more thing, that the marketing margins are remaining under pressure for the companies, and ahead of election year, if they do get victimized by way of, I think, being asked to absorb a part of rally in the cost of the fuel products, I think that would be quite negative. So that is the reason for which these companies are remaining subdued, and we believe that I think this is a trend will not get settled till the point of time we get the clarity on the long-term basis as far as the crude oil prices are concerned. Though I have expressed my view that the crude oil prices at higher levels can't sustain for a longer period of time, one needs to see as to how long it will continue at these levels.
What do you make, Deven, of the banking space, especially private banks like ICICI Bank and Axis Bank? They did manage to react positively on relatively weaker numbers on the expectation that the worst is over. Are you of the belief that the worst is over, or this was just a one-off move that's come up?
Well, I think on one side, on the worst news, the buying has taken place, which means that I think there is a short covering led buying which has taken place, which is important. On the other side, I think the fundamentals of these banks are not changing dramatically anyway, because on one side they have a larger amount of focus on the corporate loan book, and they're trying to shift the focus onto the retail loan book. ICICI, though, in this quarter has reported 21% growth into the retail loan book vis-a-vis, I think, subdued performance in the corporate loan book. I would rather think that these banks requires, I think, a very firm strategy, change in strategy, along with some kind of a change in the management somewhere which is required, including particularly in case of Axis, which is being asked for. So all of this put together, I would think that there will be some amount of drag as far as I think the clarity is concerned on the performance of the companies. So I do believe that the worst probably is over on the non-performing asset side. My take is that I think for investment to show relatively better performance in the portfolio, one will have to be certain about the earnings growth continuing in the subsequent quarter, and that's where I think one will keep the fingers crossed. we'll keep monitoring these banks, though believe that valuation wise they're cheap, but we need to keep monitoring them for the performance improvement which takes place.
Deven, a few days ago, you all came out with, we'll talk about this company which not a lot of people talk about, Infibeam. They did an acquisition a few days ago in terms of a company called Unicommerce. You all also came out with a short note on it. Care to tell us what this means for you, for Infibeam, and what's your outlook for the company going ahead?
So I think if Infibeam business is understood, I think this particular company is in the business of providing the services on the cloud for all the e-commerce related activity for major merchants in the country. Today they have more than 150,000 merchants across payment platform as well as the platform pertaining to the e-commerce transactions. What they have is a Government of India's marketplace called GEM is on their platform. They have added Unicommerce into the portfolio, which means that along with the payment platform that they have now employment platform, they have logistic platform that they have a customer engagement platform, they have got registry platform, and they have got order fulfillment platform. Along with that, they have now added the warehousing platform, which was a missing component up till now in this particular company's case. Warehousing platform would mean that they would be in a position to handle the complete warehousing management of most of the marketplace players, including Jabang, including Myntra, including the likes of Flipkart. Where marketing part I think is being managed by this company. So certainly I think they would have a larger amount of role to play, and the warehousing business of most of the corporates who are going online is also required to be managed, and that's where I think this particular business would fit well. As I see it, I think it's a more of a transaction driven company now than earlier days, I think, when they used to be generating their revenue through subscription. So certainly I think the business is growing faster for them, and they are probably I think likely to be 1,000 crore revenue book in the current financial year with somewhere around 400 crore kind of EBITDA, which is I think very healthy margin, which is unlike of any other B2C company in e-commerce space. So that's where we believe that I think this company holds a significant amount of potential. Investors probably haven't understood the business enough as far as I think the service aspect of the activity goes, but I believe that I think it's a unique proposition. Probably I think we'll get to understand by many investors subsequently. We believe that I think it's a good opportunity given the size that they are catering to. Government of India itself is I think $650 billion, 165,000 crore market, or $100 billion kind of a market Government of India itself is providing. So I guess I think the growth opportunity is quite significant for this company going forward.
You would believe it will be a valuation game, Deven? I mean, this is, I'm sure, an initial view, and it will get developed over a period of time, but if I can just indulge you for a bit on this, would it be a valuation led game, or would it be a business that will show a hockey stick impact of sorts on earnings per se?
So I think generally what we have studied in the internet space, most of the company, including the Google and the Facebooks and the Amazons, initially I think it would be the business on which the companies would get valued, and subsequently I think once the earning and everything gets established, I think it would be on a typical earning based valuation that will come out. Today likes of Google would be quoting it around 30-35 times price earning ratio. But in good old days, I think they used to quote somewhere around 80 times, 100 times kind of a price earning ratio. This company is relatively a new company. It's in a service business. The business model of Google then was never understood. I think this kind of business model are required to be completely understood. And that's where I believe that I think over a period of time, when everything starts getting into the quarterly performance of the business, I think probably people would start paying the valuation numbers to this company. I'm distinctly clear that I think it's a emerging business, it's a growth business, and probably I think it will move faster in the initial years. Maybe I think 100% plus kind of a growth in a couple of years from now, I think is a reality.
Okay. Deven, any thoughts on the commodity names, the likes of Hindalco, Vedanta, etc.? I mean, notwithstanding what's happened in the short term, but after 2 years of a remarkable rally, is there more in store in terms of earnings and business?
So on one side, the demand scenario remains quite optimistic for the commodity players. Most of the metal commodities are enjoying the demand scenario. Most of them are saying that they don't have enough inventory even for the market now. So obviously I think they are in the best situation today, as I may want to call it as. And with the crude oil prices going up, I think the leg up effect on the commodity prices is already seen in most of the commodities globally. So that is another advantage that they are having. As I see it, I think the valuation wise, some of these companies have already scaled up. So I think it would be slightly challenging to buy them upfront. But I feel that I think the companies, white metal companies, particularly the aluminum and the zinc, I would think that I think they would probably have relatively better time going forward. They would enjoy relatively better price and the profitability hereafter.
Fair call. That aside, PC Jewellers has some, let me just mark a couple of names. Jubilant Life is up 3.5%, PC Jewellers up about 3.5%. First Source is trading at new highs for itself, and that stock is up about 2.25%. Today, Mahindra Holidays has some upticks. Vakrangi continues to grind lower. Darshan was right. Chennai Petro, amongst other stocks, has continued to grind lower. Inox Leisure today sees some bit of profit booking, down about a couple of percentage points today. So that one has lost some bit of some bit of ground as well.
That's about it. Deven, any view on these companies in the cinema space, PVR or Inox Leisure? Not the best of numbers of late, but do you think that there could be traction going ahead?
Well, on one side, I think with the number of seats that the PVR has created, is definitely giving you confidence that they would have the sustainability of revenue and the growth continuing in that particular space. On the other side, any kind of move by the government or the rulings coming in from the High Court pertaining to the price markup that they have on F&B segment, particularly where they derive significant amount of profit component in their business, I think could have the dampening effect onto the profitability of the company. What I mean to say is that I think if they try and restrict the prices of the F&B items that are being sold into the multiplexes, it could possibly have the negative impact onto the margins of the company, because they derive significant amount of profits, particularly out of F&B business into the exhibition space. So certainly I think that is an area to be watched out for. Otherwise, I guess I think the PVR remains on a convincing side as far as I think the business possibilities are concerned.
Okay, Deven, we will leave it at that. Many thanks for joining us today and giving us that perspective. Really appreciate your time today. That's the view from Mr. Deven Choksey of KRChoksey Securities. Just before I wrap up, this is not exactly markets, but there's an important story on the Bloomberg Quint website. The government, this was put up last night by Nikunjori, saying that the government may withdraw the tax demand on free banking services. I think banks and customers both had opposed this vehemently, and the government may withdraw the demand that banks will have to pay service tax on free services provided to customers. So it's a bit of a relief for all parties involved. Okay, let's take a break on that note. On the note that, of course, the markets too are lying absolutely flat, but we'll try and decode some numbers on the other side. Blue Dart's Q4 earnings with Chief Financial Officer Aneel Gambhir. We talk about the steel companies as the inventory levels fall and prices rebound from the March lows. And then try and touch base with Deccan Gold Mines. They won the Hatti Mines dispute in the Supreme Court.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. the SME growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Bloomberg Quint has tried to bring about a different approach to business news, economic news and equity market news over the last few months that we've launched. We are now adding a fourth large element to our coverage with the launch of Portfolio, a brand new personal finance offering with a very special bunch of guests to talk about how people can plan their financials and create a robust portfolio.
I need a return of around 10% just to deal with inflation. If over and above that, I have some modest goals around children's education, my own retirement savings and so on, it's very difficult to live in India without having a portfolio which is throwing off 15% with reasonable amount of regularity.
Choose stocks where the companies have a unique DNA to overcome evolutionary changes or disruptive changes, both inside as well as outside that company.
As the name suggests, Portfolio will try and address your portfolio queries. How should you allocate or asset allocate, and what should be the quantum within each of the sections to ensure that your portfolio easily enables you to meet the goals that you may have.
Karnataka is an unforgiving state. It has rarely re-elected a government. But can the Congress afford to lose this one? The BJP is playing every card to recreate the 2014 magic. Will Karnataka be Rahul Gandhi's coming of age, or will we move towards a Congress Mukt Bharat? Watch Battleground Karnataka only on Bloomberg Quint.
Right, welcome back to Indian Open. Let's start off with earnings. You can argue that it's not been the best of quarters by the high standards that Blue Dart may set for itself. The logistics and cargo movers saw modest top-line growth in the fourth quarter. One factor would be the higher crude prices, but it does GST pain over. What about the e-commerce space, where rising competition has been hurting the company as well? To talk about all that and more, Aneel Gambhir, who is the CFO of Blue Dart, joins us on the show. Aneel, thanks so much for taking the time out. How would you sum up the quarter? Yes, the net profit may have gone up a little bit. Optically, that may look okay. But EBITDA, a 4% growth. Revenues, a 6% growth. Margins, too, marginally lower than what you did in the corresponding quarter last year. What were the pressure points?
Good morning, Neeraj. Yes, if you look at it, we had a good amount of reforms over the year, and initially we had a pain of GST, which I guess is now getting stabilized, and thereafter, if you look at it in this quarter, our volumes had a healthy growth, on both B2B, B2C space. So, but what has happened, as you rightly mentioned, that of late crude has been very volatile. And we have a mechanism which has been there for a long time, but then of late there's a different dynamics which is working. If you look at it, petrol and diesel prices have been changing every day. So maybe we need to make our fuel surcharge mechanism a little more dynamic, so that helps us in terms of taking the impact. Or rather addressing the impact which we have from the crude fluctuation. As far as economy is concerned, I think after GST pain now seems to be getting over, and then things are seemingly now looking up, and we see in going forward maybe a healthy economic environment which could help us not only country but also us in getting in a healthy growth phase.
Well, if a leader like you is facing some issues, just wondering, with the Iran deal being scrapped as well and no signs of crude easing off in the near term, would there be pressure on operations and on margins for the next couple of quarters from the looks of things right now, Aneel?
As I just mentioned that we'll have to probably make our fuel surcharge mechanism a little more dynamic, which through which whatever changes are happening of late, if that starts reflecting, probably it will not impact margin going forward.
Would be for the current price of crude, I'm guessing, right? What if crude prices were to hit another $5 or $10 of an uptick? Would the mechanism take care of such a large uptick as well?
So that's what we are saying. Currently, our mechanism is, there, which was supposed to be, taking care of the fluctuation. But then recent, fluctuation has been very high. And if you look at it, more impact is coming from diesel and petrol prices increasing. So I think that we need to factor in our mechanism so that it starts, insulating us from that impact.
Okay. Break it down as to one, I heard you mention that volumes looked okay in this quarter gone by. Break it down into volumes and pricing, and how do you expect...
In fact, there's a healthy growth in that.
Yeah, so how do you expect the next couple of quarters or FY19 to shape up? Volumes versus pricing.
Okay, as far as volumes are concerned, I think of late we have been seeing healthy growth in volumes, which after the GST pain is over and then volumes have started coming up, things have started looking up. So I guess if economy is going to do well, obviously with the economy, we being barometer of economy and distribution leader, we expect that going forward volumes should grow healthy, and which should also have a healthy revenue number for us. The only thing which I see, especially on B2C space, I think there is a lot of pressure on retailers where they have been of late seen to be changing the distribution model. They have been moving some of the volumes from air to ground, and that's where you will see probably that not reflecting in our revenue numbers in top line.
Okay. What about
because shift obviously has a difference in pricing.
Yeah, please carry on.
Yeah, sorry. Yeah, the shift obviously has because air pricing versus ground pricing, there's a difference. So some of the retailers have started moving shipments from air to ground, and that impacts the top line number.
Yeah, you could see your air tonnage too this time around was slightly lower than what it was earlier. Tell us about the potential impact of this e-way bill on express companies. Now it's slowly unfolding at a rapid pace. Maybe there are some teething problems in the initial few weeks or months, but what would your assessment be?
Our assessment is that now e-way bill seems to be stabilizing. Yes, you rightly mentioned, initially few weeks we had some issues. Now things are getting settled, settling down now. So obviously going forward, we expect this to have a positive impact on us, because all the people dealing or the customer dealing with unorganized players will have to deal with the organized players, and that gives us a good potential for the future.
Okay, then summing up all of this, how do you expect the year to be like? I don't want to get into exact numbers, Aneel, but just from where you are perched right now, if you have a vision of what FY19 could look like, and if you can share that with us.
See, now things are settling down on the economy front, and all indicators coming, macroeconomic indicators coming from government or from various institutions shows that yes, now going forward things seems to be looking up. Obviously, that will have a reflection in our numbers. So going forward, we see, we are very confident that that we will be able to see healthy numbers both on revenue top line as well as bottom line.
Would you be able to give us some broad estimates of what these percentage numbers could look like, if not exact numbers, Aneel?
Generally, we have not been in the practice of giving percentage, but I guess you can take a message from here itself when we talk about healthy growth, on both revenue as well as on bottom line.
Okay, Aneel, we won't press you for more, but I hope that the macro situation eases out a bit, and your dynamic business planning that you spoke about helps you in navigating through the higher crude price situation as well. Thank you so much for speaking to us here at Bloomberg Quint. And for viewers who missed this interaction, it will be up on the website in a few moments from now. So you can go back to the website and catch this interaction as well. www.bloombergquint.com. On to the next interaction, and that's on steel companies. They're looking at some healthy margins now that prices have stabilized. Some key raw materials like coking coal are headed lower as well, and a general uptick in manufacturing is only expected to aid demand. What doesn't augur well, though, is that the global uncertainty is up and about, and a possible trade war might also impact demand. Joining us to talk about his own company and the sector as a whole is Mr. R.K. Goyal. He's Managing Director at Kalyani Steel with us on the show. Mr. Goyal, thank you so much for taking the time out. Have things changed dramatically between what the situation was 6 months ago and what it is right now?
Good morning. Situation is changing every day. Market is highly volatile, and prices of all key raw materials, they are highly volatile. They are increasing, they are coming down, and it's a highly uncertain environment.
Having said that, the prices of your end commodity have only gone one way, and that is north. How does that augur? Because almost everybody that we speak to, dealers that we speak to, speak about how globally and in India, prices have stayed higher.
That's right. Price of steel has gone up definitely, but then the cost has also gone up maybe much more than what the price has gone up. Whether it is the cost of coking coal, coke, iron ore, ferroalloys, exchange rate, everything.
So, would you be able to put this into perspective? One, would you need to take price hikes and price hikes very, very shortly in addition to the ones that you may have already taken in order to mitigate the impact of these costs?
You see, as far as we are concerned, we are manufacturing engineering steels. We cannot ask our customers price now and then. We have already got a price increase from 1st of April. Now it will be only after 3 to 6 months.
So what happens in the ensuing period, Mr. Goyal, since you mentioned that the hike in raw material prices is higher than the hike in steel prices, do you believe there could be a squeeze in margins for a company like yours and for the sector in general?
We have to absorb if there is any increase in cost. But very recently, from 1st April, we have already got a increase. So that should take care of part of the problems.
So what happens? I mean, so does the April 1st price hike that you just mentioned right now take care of the raw material cost increase that had happened till March, or were you hoping for some more leeway out there?
It was not fully met, but then a good portion of the cost increase was taken care of.
Okay. So maybe there could be a slight squeeze in margins compared to what was there in the Jan-Feb March quarter. Would my assessment be correct?
You see, it's not that price increase happens on a particular or cost increase happens on a particular day, while price increase happens on a particular day. So there was a continuous increase in cost, and now we got a good portion of that reimbursed or by way of price increase. Now something will happen if the cost increase will be there. We'll get corrected in July or September.
So, Mr. Goyal, this still doesn't quite give me an answer of what would margin trajectory for a company like yours or for companies by and large look like for calendar year 18.
We'll be able to protect the margins. We will be able to protect the margins at least to the extent what it was last year.
Okay, that's one answer. Okay, we've gotten that out of the way. And I'm presuming that you are saying that price hikes will only happen for a company like you at least when the next revision turn comes about, which is probably a quarter or 2 quarters away. What about volumes? How have they shaped up? How has the month of April and May or this quarter look like?
You see, we are fully booked. We have no problem of quantity, and whatever quantity is available with us, we are able to sell it comfortably.
Okay, and how would volumes to your mind look like going ahead?
It will be something similar to last year because we were fully booked and we have operated our plant at more than 100% capacity last year also. So it will continue.
Okay, so that's volumes and that's margins. Keeping all of this into perspective, how do you expect from where you are right now, which is at the start of FY19, for FY19 to be versus FY18? You may not be able to spell out all the numbers, but whatever you can share with us.
You see, we are definitely continuously improving. By the improvement process, maybe we can improve some margins here and there.
Yeah, so therefore the impact on the bottom line, sir?
Yes, it will be positive.
Yeah, but could you give us a sense of what's the kind of growth that you envisage in FY19? Top line, margins you've already mentioned will be constant, or you'll be able to protect the margins, and therefore the resultant impact on bottom line as a result of the top line growth?
Until we are able to improve something, it is very difficult to say that this much we will be able to improve. But definitely every year we are able to improve our margins. We are able to reduce our cost. This year also some such thing will definitely happen.
Okay, great. We wish you all the best, Mr. Goyal. Hope you can do better and hope the scenario improves much better for you as a company. Thanks for being candid with us today, Mr. Goyal. Appreciate it. Well, that's one steel manufacturer talking about some squeeze in margins, but we'll be able to protect margins the way they were last year. Now, Deccan Gold Mines, the stock has been on a roll, really. The news, of course, is that they've just scored a win in the Supreme Court. The Apex Court has upheld the miners' plea to retain rights over the northern part of the Hatti gold mines in Karnataka, measuring more than 500 square kilometers. Joining us now to talk about the reserve and the win and the impact of the same and the way ahead is Managing Director of Deccan Gold Mines, Sandeep Lakhwara. Sandeep, really appreciate you taking the time out and joining us and speaking to us at Bloomberg Quint.
Pleasure.
Sandeep, so tell us, what does this mean? You know, it's been a long road to some success for you as a company. We've been speaking for the last 4 or 5 years. You've been very patient and very candid, I might add, about what the road ahead would be like. I've seen you and heard you a number of times caution investors, then don't get too happy. There is still some fight ahead. What does this verdict mean for you?
Well, this verdict is very, very important for us. You know, essentially, it clears the way for us to go out and additionally explore something like 11 odd prospecting licenses that we've lodged. So explore those prospects that are under the prospecting licenses, and particularly in the Hatti belt, which really is one of the most important gold-bearing belts in India. You know, it hosts the world-class Hatti gold deposit that is currently being mined by the Hatti gold mines. But we have explored, as you indicated earlier, something like 531 square kilometers. And we believe that the potential for gold discoveries in this area literally runs into several hundreds of thousands of ounces. So, from that perspective, opening up this belt and asking the state government to process the grant of our peers under the current legislation, the Supreme Court has basically paved the way for us to go back into the area and start, really addressing it, redeveloping it, addressing all the farmer issues that were put back, on the back burner. So a lot of opportunities for us in the future.
So you will now go to the state of Karnataka, which I think the Supreme Court has directed the state to consider the case of your company for grant of a prospecting license. I would presume
Correct.
That's the way ahead.
That is indeed the way ahead. See, the Supreme Court has done two other things. One is exactly what you just said. The other thing is that they've upheld the decision of the central government, which supported us all throughout, the last 5 years, where the decision that they made to ask the state government to grant this area to us, which the state government was contesting, has been upheld. And the third thing that the Supreme Court has done is they have set aside the High Court judgment, which favored reservation of that area in the Hatti belt to Hatti Gold Mines Limited. So all three, or the two obstacles that were there have been removed, and the third has paved the way for the grant of peers to be processed.
Sandeep, could you explain point 2? I mean, when you started off, you said the 2 points. What was the first point that you made? I just missed that.
The first point was, normally when you lodge a prospecting license application, the process involves lodging it with the state government. The state government then seeks approval for processing of that PL with the central government or to the central government. In this case, rather than seeking approval of the prospecting license or the grant of prospecting license to our company, the state government requested reservation of that area in favor of Hatti Gold Mines. The central government denied that reservation pursuant to whatever order that they put in back in 2012. The state government refused to accept the central government stand on this matter and continued with its reservation process. So that original decision of the center, where it rejected the reservation request from the state government, has been upheld by the Supreme Court.
So that is part one. And what was the third part? I mean, that is what I was interested in, actually.
Okay, the other part was that the matter ultimately first ended up in the High Court, where the High Court issued a ruling, and there are two sections of the Act that came into play as far as this ruling was concerned. One is the right of the state to reserve an area, and two is the right of the applicant, e.g. our company, to have a preferential right where we have undertaken prospecting earlier. So just a little bit of a history. We had gone into these areas under what is called a reconnaissance permit, which was granted to us several years ago. We did the prospecting, spent the money, identified the resources, took it to the next stage, which is the prospecting license application. When we lodged the prospecting license application, the government in its wisdom, together with it, the state government in its wisdom, together with Hatti Gold Mines, sought to reserve that area in their favor against grant of appeal to us. So that matter ultimately went to the High Court, and the High Court ruling was a little ambiguous, where they actually, to a certain extent, upheld the right of the state government to reserve that area under that Section 17A2. But one of the clauses of that Section 17A is that the area can only be reserved subject to central government approval. That central government approval was never forthcoming, as I covered in the earlier point, and on that basis, they could never reserve the area. So the Supreme Court has now ruled that the High Court erred in their judgment in this respect.
So Sandeep, am I safely assuming that you will get a preferential treatment, loosely put, for areas in which you have done trial prospecting earlier?
Absolutely correct. Absolutely. And that is our right. And that right has now actually been further enhanced under the new legislation.
But that doesn't mean that you will necessarily get it. There could be competition as well on these belts?
No. That is reserved effectively for us. There can be no bidding for those areas. There is quite apart from the old Act, under the new Act, there is a Section 10A2B, which entitles only us to receive that prospecting license, subject, of course, to complying with all the other regulations and requirements that the PL demands.
Okay. So would it be safe to assume then that the areas in which you had done prospecting are now effectively yours?
Yes, subject to the processes, due processes being addressed over over the grant period.
How long would you envisage this would take, Sandeep?
Well, look, if they really wanted to do it, it should not take more than a few months. The question is, how quickly do they do it, bearing in mind all the processes involved? By the way, the law is very clear that a prospecting license application must be processed within a period of, I think it is 3 or 6 months. Okay. So they have to do it within that period, but whether they actually do it or not sometimes remains to be seen. But I think in this case, because of the Supreme Court order, I am fairly confident that it will be done within this period.
What was Hatti this Hatti Mines belt the bigger of the two that you try to prospect in? I believe the other one is Ganajur. Which is the bigger one?
Definitely the Hatti belt.
Definitely the Hatti belt. Okay.
Yeah, now it's one of the most prospective areas.
Okay, Sandeep. So Ganajur, I believe, is still under process. I just want a couple of last questions on this interaction. Firstly, what does this mean for potential earning profile of Deccan Gold Mines? For long now, investors who've been in this stock have been wondering as to when do the earnings start coming in. Now, would you believe you would have some sense of timelines? When do revenues start and when do earnings start for you as a company?
Still a little early, and I'll tell you why. At Ganajur, which is going to be the first mine that we are going to bring into production, what we are, our mining license application has been cleared by the state government law department.
Okay.
It is now awaiting the final sign-off by the Commerce and Industries Department. As soon as that sign-off happens, we can then trigger off a chain of processes that will lead ultimately to the execution of the mining license. And as we have always maintained, once this LOI, as it's called, is issued, it's roughly between 12 to 18 months from that period that we will go into production.
Okay, so earnings, even if
will be post that.
Okay, so with Hatti also falling in, it's still about 18 months away before you prospectively get some meaningful revenues and earnings come into place.
I would definitely think so.
Okay, one last question, Sandeep. You know, midway through last year, there was a lot of talk about how now that you're so close to getting these prospective licenses and starting mining, you would, for the need of capital, need to get in a prospective investor into the company or a project-specific basis. Are you still on the prowl? Have you kind of shortlisted anybody, or would you restart that process now?
I think we are on the prowl, and we will restart that process now.
Okay, but you're not close to anything as yet?
No, we have to sit across the table and discuss the issues, no.
Okay. Sandeep Lakhwara, congratulations on this and all the best for the future ahead. Thank you so much for taking the time out.
Pleasure. Thank you.
Well, that's Deccan Gold Mines. Fairly hopeful of even the Hatti, actually fairly confident of the Hatti Gold Mines and the prospective licenses being granted to it. As per them, the legal law states that those mines are now effectively theirs. The stock up 20%, 1 million shares traded. With that, it's a wrap on this leg of Indian Open. Thanks so much for joining in. Up next is the F&O Show.